Hi everyone, welcome to the TBR Webinar series. Today, Principal Analyst Alan Kranz, Senior Analyst Cassandra Mushin and Megan McGrath, and Research Analyst Jack McElway will be discussing customers care less, vendors buy more, and both sides become more intelligent. Before we get started, a few housekeeping notes. At the bottom of your screen, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you will receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Alan to begin the webinar.
Great, thanks Sarah. Thanks everybody for joining. So today we'll cover the predictions that we have looking forward into both the cloud as well as software markets for 2019. It kind of ties up what we saw in 2018 and then projects that forward for how things are going to change and evolve, we believe, in the coming year in these spaces. So joining me today, I have two senior analysts, Cassandra Mushin and Megan McGrath, who cover different areas of the cloud and software markets. And you'll also hear from Jack McElway, the research analyst who supports the ongoing coverage as well as looks at vendors, including Salesforce. So the trends that we'll go through today come from our coverage across the cloud and software space. That includes, as the title implies, both insight in terms of what customers are doing, in terms of their behavior for adoption of particularly cloud technologies, replacing some traditional software delivery aspects, and also coverage from the vendor side in terms of the business of what they're doing from an investment, returns, and development standpoint from their overall strategy to address customer needs. So it's really both sides of the market that we'll go through today. For an introduction, I want to start with an overview of what we see in terms of customer adoption in the space, and in particular, with growing maturity in terms of the overall cloud market, how that's manifesting in terms of the use of different cloud vendors and technologies against their workloads, and in particular, this development around more multi-vendor environments, which is really the starting place, initiation point for moving to the hybrid end state that a lot of customers are striving to get to in terms of having more choice and flexibility in terms of how IT is delivered, and being more flexible in terms of mixing and integrating different services together to achieve the business outcomes that they're looking for. So if we start by just looking at the different types of services for cloud and what customers expect in terms of the number of cloud vendors they want to use over the next 2 years, you get a sense for, even in the more mature infrastructure as a service and platform as a service spaces, about a third of customers expect to add vendors to both of those overall categories of cloud services. Now that's notable because for those spaces are most mature. They've been around, for more than 10 years at this point, kind of starting with AWS kicking off the availability of cloud delivery methods, and that's grown obviously to include a number of different vendors. And so even in that more mature environment where you've seen a consolidation really around kind of a big three for enterprise customers, that for a lot of customers who fall in that stay the same, they've already added a second main infrastructure or platform vendor over the past 2 years. A lot of that has been driven by their desire to have more flexibility and negotiating points with cloud vendors. For a lot of customers, one of the advantages of cloud is that it breaks some of the legacy lock-in they have with traditional software vendors and traditional hardware vendors to some degree, in terms of building up over time, having a lot of sunk costs and investment in a certain platform or with a certain vendor, and really kind of losing some leverage for negotiating the best deal and getting the right solution for them regardless of vendor. And so that's certainly developed over the past couple of years. We've seen a lot of enterprise customers adding skills, getting staff certified in second platforms to be able to manage and deploy services and have the skills to support that, which is a big thing. It's not just spooling up a service, it's really managing it in the way that they need from an enterprise perspective. So that vendor lock-in, as well as more differentiation comes out around things like advanced analytics, IoT, different data sets, availability. There's those little points of differentiation that we see the vendors toggling back and forth in terms of delivering the next set of innovation to customers. And so that allows a lot of them to be able to capitalize on that and not be tied into a single vendor's roadmap in terms of the innovation for infrastructure and platform. And then lastly, it's kind of the application space, which obviously from the graph you see has more customers saying, you know, they're going to add to the vendor landscape within that set of workloads, which makes sense. For a lot of customers, the more core mission critical applications, ERP, manufacturing, supply chain, those types of things have been slower to move to cloud for a variety of reasons. But a lot of those are being overcome. We've done recent studies picking on manufacturing in particular, where for a lot of customers, they're more open to cloud options for deploying some of those services, but it's going to be an incremental approach in a lot of ways. Most are not looking to do a wholesale replacement of a business process with cloud technology. And want to get started in a more incremental way. But there's still kind of culture, sunk investments, the age of the technology landscape that, you know, will make that play out over time. And so, you know, we're updating the current customer study right now, but I think you'll continue to see more expectation for customers to add to the application landscape of vendors in the coming years, you know, as that again just takes time to develop, and so that's not going to be something where there's a big influx of applications adoption and then customers standardize. You're going to continue to see more diversity, especially with that incremental approach that a lot of enterprises are going to use as they replace the legacy application landscape. Mm-hmm. So that's kind of the starting place for the overall trend in terms of, again, customers caring less, accepting cloud, but looking for some alternatives in terms of the vendors that they're going to work with as they continue to grow and mature those investments. So the second kind of big question that I don't know, I've gotten this question over the past couple of years really is, you know, what is the end state for where cloud fits in terms of the overall IT investment for most enterprises and the market in general? You know, how much of it is going to be cloud-based versus other delivery methods, continued on-premise investment, traditional deployments, those types of things. And so my kind of back of the napkin has always been, you know, between 50% to 60% of IT investment will probably move to cloud over the long term. So that's probably at least the next decade in terms of how that develops. And if we look at some of the, again, feedback from customers in terms of their expectation for the next 3 years, so it is future looking, how they see that balance playing out at the two kind of extreme ends of the spectrum. And it doesn't say that it's going to be 100% one delivery method, but 28% expect most of their workloads to remain in their own data centers. So kind of that traditional model approach, a slightly lower percentage on the bottom half of this expect to offload most of their workloads to cloud. And then sitting in the middle is the majority of customers who expect a roughly even mix. So, you know, right around that 50% threshold for how they're going to use cloud, but also maintain some of that existing traditional delivery method, you know, based on business case, application use cases, culture. I think a lot of that is just more static than a lot of the cloud vendors might expect. So it'll be a mixture for the majority of customers. And so you're starting to see that stabilization in terms of ending up around 50 to 60%. And I think from a market opportunity perspective, there's a lot more, I'll say, kind of niche or things that fall in between. If you look at targeting that 50%, there's a lot more mixed delivery methods. We just picked up coverage of the co-location market. It's come up in a number of customer interviews that we're doing more recently, again, as part of that middle ground between public cloud and keeping everything in a traditional data center, because being able to reduce the overall data center expense, again, get some of the advantages, financial advantages of cloud, of not having to own and manage and procure all of the real estate and housing and operational costs that go into data center management on their own. That's a great middle ground. Another area that we've been covering quite heavily is the on-premise hybrid device, where it may sit in the customer's data center, but it's designed to a lot of times be an operational expense on connect to cloud services. Again, part of that middle ground where we're starting to see more maturity and solidifying in terms of all those different ranges of solutions that address common customer needs and, again, get them the outcome they want without necessarily having to go to one extreme or another. So again, another sign of maturity in terms of growing out some of those in-between markets, so it's not all or nothing in terms of the migration to cloud. So that gives you a sense for kind of the overview of how we see the market maturing and where we think things will settle out from an overall market perspective coming up. Now we'll cover kind of the first specific prediction that was called out. There's 3 of them, so the other senior analysts will jump in terms of their perspectives and examples for how vendors and customers are kind of supporting some of these points as we go through. So in terms of shifting a little bit to the vendor strategy, and there's a lot of coverage and analysis done of the infrastructure as a service market, how that very quickly over the past 5 years went from one in which there was a lot of different providers entering the space, telcos having an angle in particular where they were going to come in and be cloud providers, and the investment race in a lot of ways weeded some of that activity out very quickly. And only the vendors that could afford to spend billions of dollars every year or even every quarter to build out the infrastructure to support that were able to stay in this space. We're seeing the same thing in a lot of ways in the software as a service market. It's not quite as pronounced. There's still a lot more diversity in terms of the providers. But we started to see in 2018, and we think this will continue, an increasing sense of urgency for the participants in that space to grab a lot of assets very quickly, invest a lot in, compared with some traditional investment models in R&D, but in particular to buy a lot of innovation and customer bases to shore up that opportunity, even though it's not fully developed from a revenue perspective. So we have the Oracle example here where we look at over the past 3 years the amount of acquisitions that they've made. Particularly, there's a big focus on software as a service for them with that spending. Also, their cloud R&D, so kind of shifting a lot of the internal innovation focus over to cloud-delivered services versus traditional. And then in the green bar, you see how that plays up in terms of comparison to the actual cloud revenue results. And so it's overweighted to the investment side over the past 3 years. We did this analysis for a number of different vendors in the space. Oracle is certainly not alone. but just highlights, again, kind of that investment race and the positioning to capture future revenue growth and scale over time, but that's been slower to develop than the investments. So it's kind of mismatched in that regard, at least over the past 3 years.
Yeah, and I think right along that same avenue of sort of investing for growth and acquiring for growth, and really in line with sort of the urgency of acquisitions that Alan laid out, I think SAP's acquisition of Qualtrics is sort of the prime example of that as sort of a really recent and relevant topic. I mean, SAP has been pretty clear that the acquisition of Qualtrics was not necessarily very specifically planned for the point in time that it was made. I think their hand was forced a little bit when Qualtrics filed their S1 for filing for IPO. And so that's another example of sort of this urgency that vendors have to acquire technology that will really enhance their portfolio. And so, I mean, and the SAP acquisition of Qualtrics came at a very high price tag. I believe it was somewhere around $8 billion on a revenue base of something along the lines of $500 million in its most recent year. So about a 20x multiple really shows the value that SAP expects to get out of the technology that really goes beyond just the incremental revenue uplift. This is really a technology acquisition. And I think that points to this idea of sort of the experience economy and the experience data that Qualtrics can lend to SAP's broader sort of intelligent enterprise story. And so with the additions being more technical than sort of financial at the forefront, we really expect sort of SAP to build the experience economy or experience data into their value proposition across 2019 and really enhance the value of their collective applications portfolio. Not only do we see sort of that specific acquisition paying off for SAP, but I think it will actually really force some of SAP's applications competitors to adapt immediately, pretty much in 2019. I think vendors like Oracle are going to have to build their own messaging around capturing this experience data. Customer experience is a pretty carved out segment, but if you extrapolate that to sort of any other business unit, it's not being discussed quite as much. So not only customer experience, but feedback loops on brand experience and employee experience are going to be really key, I think, as we run into 2019.
And Microsoft has really been acquiring for growth as well. It acquired the code repository GitHub to try and tap into GitHub's developer ecosystem and get them to use Azure as their preferred platform, as well as bring enterprise developers into GitHub. And when the acquisition was announced, it raised some concern among developers as to whether Microsoft will keep GitHub as an open source community that supports any platform or slowly skews GitHub towards Azure. But Microsoft has stayed true to its word in keeping GitHub agnostic. And proving its agnosticism is one of the reasons why GitHub developers are starting to use Azure. And the other reason being that Microsoft is appealing to developers with things like free access to Azure pipelines on GitHub Marketplace, free access to private repositories, that's more typically for smaller developer teams, and updates to GitHub's enterprise offering. So overall, Microsoft's plan for the acquisition has been executed well thus far, and it's been a fairly symbiotic relationship with Microsoft bringing enterprises to GitHub and GitHub bringing developers to Azure. And to maintain this initial success, we expect that Microsoft will continue to improve integrations between its developer tools and GitHub, and Microsoft will also become increasingly top of mind among developers as time will continue to prove that Microsoft's Windows-only ethos is really something of the past.
And then I think the elephant in the room, pun intended, is the acquisition, IBM's $34 billion acquisition of Red Hat. And they're expecting to, close it by probably the end of October, pending, all the regulatory approvals and loopholes that they have to, or hoops that they have to jump through. But I think what's interesting is that a lot of people think Linux when they're thinking about Red Hat, but I really think that the big synergy for this acquisition is, yes, access to the mid-market, but also really around OpenShift and how IBM can take OpenShift, which is Red Hat's Kubernetes platform, and integrate that portfolio and capabilities with its own Kubernetes portfolio that it continues to evolve, especially through IBM Cloud Private. So I think that for customers that are considering Kubernetes and don't necessarily have a preferred vendor in mind, Red Hat might be a great option. As an open source vendor, kind of at its core, there's kind of this perception there that, they're not going to necessarily try to upsell me on X, Y, and Z parts of their portfolio like some of the more proprietary vendors might do. So that's a benefit for Red Hat, and if the acquisition closes, for IBM as well. So I think that that's part of the big strategy there from IBM. But that's all to say, it will really only truly be successful if IBM can successfully kind of incubate and nurture Red Hat's open source culture and policy instead of kind of blue washing it, for lack of a better phrase, as it's done in the past with other software acquisitions especially. And, I think that this too was IBM's realization that they aren't growing as fast as their cloud peers. So they've posted consistent growth around 20-25% on a year-over-year basis. But last quarter, I believe Google, Amazon, and Microsoft all posted cloud growth of over 45%. So I think IBM knows that it needs to play nice, so to speak, with everyone and really get into this more open source and hybrid world in order to, continue on its cloud trajectory and growth while the others continue to just take market share. So I guess now I'll move to our second prediction, which is really all about how we're seeing a big shift in terms of adoption, in the sense that I think gone are the days of having an end state or desired end state for an entire IT department. I think, years ago, there were a lot of very hopeful CIOs out there that were really pushing for, we're going to move all to the public cloud. It's going to be great. We're not going to have to manage anything ourselves. And now, especially in the last 6 to 12 months, we've really heard kind of a change of tune across sectors, across company size segments, if you will. And, conversations are really centered now around how it's not just public cloud, it's not private cloud, and it's not just legacy IT. Really, it's by the workload, at the workload level, decisions are being made. And of course, there are nuances depending on, geography and regional requirements, or industry, or even just a really risk-averse C-suite that could basically insist, nope, we're not going to the public cloud, we'll go to private cloud, even if that means, what we've heard is a 20% higher cost than public cloud. But by and large, what we've really been hearing is, deployment or environment decisions, so that's your public versus private versus on-premise, are being made workload by workload. And, there's more people at the table as well that are influencing that decision. So, drivers of this are, of course, plentiful. Leveraging and optimizing your past and ongoing legacy IT investments. You don't want to just rip and replace necessarily when thousands of dollars have been invested. Also, there's far more departmental influence now than ever before, specifically your lines of business, your CFOs, et cetera. And then also there's that, pesky shadow IT adoption that has and does kind of continue, that essentially makes, IT departments have to grapple with certain applications that were adopted by the lines of business. And that list can go on and on. I could talk about it for days, but the one that really sticks out more to me is that line of business influence purchasing. Your lines of business across the board they're being pressured to drive, faster and better business outcomes. We've been hearing that time and time again as use cases, case studies, et cetera. And one way to do that is to utilize your cloud applications, which is essentially generating all of these multi-SaaS environments. And in a multi-SaaS world, despite, vendors' improvements in features and functionality of, your off-the-shelf cloud applications, there's still a lot of demand for application customization, which is also, in turn, kind of spurring more PaaS adoption along the way. And one of the big trends that we've been seeing is really demand for a hybrid PaaS environment, which I'll get into in a second. And then along with this, so again, with your line of business kind of fueled app adoption comes this proliferation of data. And businesses are looking to kind of better understand and do more with their data, which is now also driving infrastructure as a service usage and adoption, especially when it comes to data storage. And so with multiple infrastructure as a service vendors comes kind of unique flavor of challenges. And a lot of organizations don't want to be necessarily locked into one infrastructure provider. It's very expensive to move your data off, et cetera. There are a whole multitude of reasons. So we've seen a lot of CIOs kind of employ a two infrastructure as a service policy to kind of hedge against your vendor lock-in, and also for disaster recovery in case there is an outage. And I think what's really important to mention here is the kind of proliferation of your container and container orchestration platforms from Docker and Kubernetes that help execute these multi-infrastructure as a service strategies, being able to move applications from one infrastructure to another. And I think last year we saw quite a bit of activity around Kubernetes specifically, especially from both IBM and Google, to make container orchestration work across hybrid environments. So we saw that with IBM Cloud Private, and then Google's GKE, and then their GKE on-premise portfolio as well. And so that also is really helping make delivery methods less of a critical factor necessarily when choosing workload deployments, because now you have the option to move from, say, an on-prem environment in your own data center to, say, a Google Cloud environment with relative ease. And that kind of just, I guess another pun, full circle brings it all back to, the line of business influence cloud purchases. So there might be some workloads that are best suited for public clouds, and there are others that are best suited for a dedicated environment, either hosted by the vendor or on the customer's premises. But we've really seen a push to offering interoperability across those environments with the help of Kubernetes along the way. And then the other piece, and Alan also already touched on this a little bit, but talked about kind of the hybrid PaaS offerings made possible by Kubernetes. But there's also, those hybrid infrastructure as a service and PaaS offerings. So that's your Azure stack and now your AWS Outpost. I think these are fundamentally disruptive to the cloud market, kind of across the board, whether you're talking about public cloud, private, or your self-built clouds, because they essentially are offering these truly hybrid deployments with bidirectional synchronization across, customer and vendor data centers. And essentially offer kind of the best of both worlds for some of your more mission-critical workloads. And then additionally, these really help extend your co-location strategy if that's something that you've invested a lot of time and money, resources into. Being able to host AWS Outpost in, say, an Equinix data center, and then through all the interconnects available, also hybridize that with your broader cloud environment. I think that that's kind of a game changer, and I think we'll really start to see some big impact on the market, maybe late 2019 and early into 2020. And I think one big use case worth mentioning is the U.S. public sector with the JEDI contract. I think that both Microsoft and Amazon are contenders for that contract, specifically because of its tactical edge and synchronization requirements that are made or met, or could be possibly met, by these local kind of behind your firewall options with these appliances. So in 2019, there's going to be a fair amount of legacy IT modernization and optimization by blending your cloud and legacy IT solutions with multi-cloud and hybrid orchestration tools and platforms at play. There's definitely going to be a place for on-premises workloads, especially those that are really heavily transactional. But I think ultimately the vendors that we're really going to see take off in 2019, even more so than in 2018, are those that can provide those truly hybrid deployment models.
All right. And so with that, I'm going to jump into our third prediction, which shifts gears a little bit and talks a little bit more about sort of the future of artificial intelligence. So I think as just a setup, it's across 2017 and 2018 in particular, artificial intelligence has gained a lot of traction and public recognition. But thus far, and primarily throughout those couple of years, we've seen a lot of that attention on the platform side of things. And so a lot of the conversations have been around building AI and AI platform tools. And we've really seen the biggest and sort of most discussed vendor investments among those sort of platform and infrastructure vendors. So Amazon Web Services and Microsoft Azure are really the two that pop into mind. Google Cloud is also another vendor that has a lot of sort of historical experience in the AI field and is really looking to push that out to other developers through their platform. We've seen Microsoft in particular acquire more vendors in the AI space than I could rattle off in the time we have left. But that, I think, is just a really key anecdotal point as something to point to about how big of an investment platform vendors are making in AI. That goes alongside some of the regional initiatives from governments about sort of fostering AI development in different regions. We've seen a handful of those across Europe and Canada. And those have really drawn, again, the infrastructure and platform vendors' investments. And so you can see the trend here that thus far a lot of the AI development has been on the platform side and is about equipping developers with AI tools. And AWS has started to democratize that further with solutions like SageMaker, which bring machine learning and artificial intelligence to more developers by sort of using the low-code approach, where developers don't have to know how to build an entire algorithm, but can utilize some sort of frameworks, really, to more easily develop AI-backed solutions. But what we're hearing from customers is that, and I think vendors are recognizing this, customers really need to see the use case of AI. Not many business decision makers are looking for AI development tools. They're looking for the outcomes that AI can provide. And so as we sort of move into 2019, I think we're really going to see a heavier emphasis, and a few vendors have started this conversation, namely Oracle and SAP, but I think we're going to see a much stronger narrative around artificial intelligence equipped applications. I mean, there's definitely use cases in the market, but they're not really being promoted as strongly as some of the platform tools. So I think, in particular, chatbots and voice interfaces have really been foundational to most of the consumable, really early AI use cases. And I think that's in part thanks to the consumerization of virtual assistants like Siri, Alexa, Google Assistant. And those have really exploded in their prevalence across sort of consumer use cases, but also enterprise use cases. And we're seeing applications tie into those technologies through some of the platform services of the sort of related cloud vendors. So Alexa for Business being a service that Amazon offers to help enterprises utilize Alexa to build sort of voice interactions into their applications. I think in 2019 we're really going to see recommendation engines emerge even further. Oracle has started to build some use cases around sort of candidate recommendations within their HR application. And so we're going to see that sort of take root a little further. And I think the largest value that we're going to see sort of added by these application vendors in 2019 is process automation. And so we've had robotic process automation for a while, but even vendors sort of crafting their narrative around automating financial close automation within an ERP solution. I think that's going to push some of the more hesitant ERP cloud adopters to embrace those solutions and really elevate the value of the ERP solutions that have those sorts of features. And so with that, we really see that customers are going to sort of rally around these applied AI use cases, and we really think that the applications that have sort of artificial intelligence-backed features are going to drive about a quarter of the SaaS adoption in 2019. So a really significant amount of application adoption will be driven by just this idea of applied AI within different processes.
Okay, great. Well, that's the last prediction that we have, so that wraps up that part of the content for today. There are a number of reports that are available to go deeper, so you can check with your internal organization to see whether you have access through our subscriptions, and reach out if you have any questions or want to see some samples of those. You'll be hearing more about them. I guess we don't have a Q&A slide, but we'll pause here and do Q&A. We have a couple questions that have come in. Feel free to submit more of those now. And you can also send us an email offline, and we can get back to you as well if there's something you want to take and ask privately.
So the first question that came in is, when do you expect to see a bottoming out of legacy markets, outsourcing, software, et cetera? So I can start and then hand it over. So in terms of the services side, we've actually done a fair number of projects around this before. The general sense is that it's probably going to be within the next 5 or so years where we're going to kind of see this bottoming out / inflection point where all of the legacy ITO erosion will have kind of come to fruition or come to terms, and then the cloud or emerging technology related services will start to help really boost growth in a more material way than we've seen thus far. I just think the overall services market has been really hindered by all of this ITO erosion, and cloud has yet to reach scale to a point where it's been able to offset that. So I think we'll see that come I don't know what year is it, 2019, 2024, 2025.
Oh boy. Yeah, just to jump in a little bit on the impact of that bottoming out and the transition to cloud from an overall market perspective. For the software markets, which I've covered for quite some time, it's been an ongoing transition. It's been pretty consistent declines for the traditional software space, particularly license, as customers may maintain some of the maintenance spend to keep the existing services, but clearly a lot of the growth is over the past 5+ years shifted to cloud services and caused an erosion in that license. It has started to stabilize a bit, so I think in the next probably 2 years we'll see that stabilization occur. And there's even pockets of, if you look at a vendor like SAP, they've actually seen growth in terms of some of the traditional software license revenue as they've put out innovation around S/4HANA, those types of things that do have significant customer uptake still with traditional models. Part of the bottoming out through some of the interviews that we've done more recently around ERP applications that for both SAP as well as Oracle, there's starting with a kind of a more increased emphasis for the sales teams to push cloud. They're causing some of that bottoming out on their own. And then, eventually some of the product roadmaps will phase out some of the traditional delivery methods in favor of cloud. So over the next couple of years, it'll probably occur, and in some ways it'll be driven by the vendors themselves, so they don't have to continue maintaining the businesses and investments and everything that goes into supporting multiple different product line delivery methods for the traditional versus cloud products.
Another question that came in is, where do you see the next big wave of cloud acquisitions? Which is an interesting question. I mean, in my opinion, and we can bat this around the table a little bit, in my opinion, I kind of expect to see more of the same for now, at least especially in the first half of the year. Definitely some pockets of focus on kind of the open source communities. So, I mean, VMware, IBM, there are plenty others towards the end of last year that were looking directly at the Kubernetes market. So I would expect to see some of that continue, at least through the first half of the year, especially as container orchestration and portability become more of an enterprise desire at this point. I think that's where I'm placing my bets.
Yeah, I think there's sort of two different answers I have here, and actually I think I, in one breath, can answer another question that came in about sort of potential acquisition targets in the customer and employee engagement space. And so along the lines of sort of the SAP Qualtrics acquisition that I talked about earlier, I think not necessarily functions of sort of very discrete functions. I mean, there will definitely be some. Glint was in the question. It was mentioned as sort of an add-on to the LinkedIn acquisition that Microsoft made. Those, I think, are two very related acquisitions around sort of feedback loops. And so with SAP and Microsoft having clear acquisitions there, I think Oracle's the other vendor that's really going to fall in line in 2019 and build out sort of that experience storyline. But I don't think that Oracle's necessarily going to acquire into the space, and this is where I think my answer to the first question is more that vendors are going to continue to acquire around data, not necessarily an application function, but around sort of different touch points to end users and customers that really collect data to enrich the insights within applications. So it kind of ties together actually a couple of the points and goes back to the artificial intelligence topic that vendors I think are really going to try to build out the insights that they can provide to their end users, be that through recommendations or automation, but that it will really be on the data side rather than the function side.
Okay, great. I think that's all the questions that have come in during the webcast. Feel free to, we'll leave it open for a bit if you want to submit more, and we can always follow up, but I'll hand it over to Sarah to wrap it up.
All right, everyone, please feel free to reach out to the team with any follow-up questions. If you have a few moments, we would appreciate if you could fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us Wednesday, February 27th for Consulting's Robot Army, How RPA Changes the Consulting Business Model. Thank you and have a great day.